Hello, my dear students. So you said that you didn't understand the chart pattern. So let me explain it to you. I will break it into about 2 to 3 parts. Now, chapter 1. What are candlestick charts? Candlestick chart is a type of financial chart used to show the price movement of an asset like stock, forex, or crypto. There are different ways that prices can be represented on a chart. But then candlestick is one of those ways. Like back in school, you should know about bar charts, pie charts, all those things, line charts. But in trading, we use mostly candlestick to tell price movement on the charts. Now, why use candlestick? They give more information more than simple line chart or all those pie charts, you understand? Not only do they show the closing price, but they also show the open price, the high and the low. Now I will show you now. Let's go to MT5 and look at simple candlesticks. Now these charts now let's go closer. For example, this chart now, how to understand it? This is the opening. This is where it opened. It went up. So this is the high. And then it went low. To this point, this is the low. And here is where it closed. Look at this one. This is the opening. It went low. So this is the low. It went up. So this is the high. And it closed here. And you can see that the next candle opened where this one previously closed. It went low, so this is the low, but then it went back up, so this is the high, and then it closed here. And the next candle started from here again. Do you understand that? If you still understand that, let me know. Now let's go back to the notes. Okay. Chapter 2. Each candlestick has 4 parts. The open, the close, the high, and the low, like I explained in chapter 1. Now, colors. Bullish candlestick means bull. When you hear bull, is up. When you hear bearish candle, it means down. It is usually green, while the bearish candle is usually red. But you can customize the color as you like. But then on like a professional setting or like the way that it's supposed to be, the bullish candle, that is the upward candle, is usually green, while the downward candle is usually red. But colors can also be customized to say the downward moves is red, the upward movement is green, the downward movements are red, and the upward movements are green. Let's go to time frame. Now, a candlestick's meaning changes depending on the chosen time frame. Example, on a 1 minute chart, each candle represents 1 minute of price movement. On a 1 hour chart, each candle represents 1 hour of price movement. Let me show you what I mean. Currently, we are on the 4 hour. See, it's H4. We are on the 4 hour time frame, which means that each candle represents 4 hours of price movement. The open, the high, the low, the close, everything is happening within 4 hours. Each candle, 4 hours, 4 hours, 4 hours. Now, look at all the time frame: 1 minute, 5 minutes, 15 minutes, and all the rest of it. Now, if we go to the 15-minute time frame, each candle now will represent 15 minutes of price movement. Now, this using time frames to understand chart is very nice, because now if you look at a 1 hour candlestick, all you will see is one candle. But then if you go lower to like 15-minute time frame or like 30-minute time frame, you will be able to see smaller price movement within that 1 hour candle. Do you understand what I mean? You will be able to see price movement in lower, like in a more small time, like in lower time frames. That's what I'm trying to say. If you put the daily, you will see each candle here represents 1 day. Each candle here represents 1 day of movement. And now you may not be able to understand what the 1 day of movement candle may mean, but if you go lower, you will be able to understand. Like the 1 minute time frame, each candle here represents 1 minute of time that has passed. Look at it currently. Look at it, 46 seconds. That is what's remain in this 1 minute candle movement. So each candle here represents 1 minute of time, depending on the time frame that you set it to be. Another one, chapter 4. Basic candlestick types. Long green candle means strong buying pressure. Long red candle means strong selling pressure. Doji candle means that's open or close. It means indecision in the market. Hammer candle means smaller body, longer wick, potential reversal. Shooting star, smaller body, longer wick, potential reversal downward. Let me explain it on the charts. Let's start with the long green candle. Okay. See, it's long green candle, which means bullish price movement upward. Long green candle means bullish candle, bullish price movements. See it, long green candle, which means that the buyers are in the market, so the price is likely to move higher. See it, long red candle, which means bearish movements, which means there are more selling pressures in the market. There are selling pressures in the market. Bigger green candles means they are buying, people are buying, while red ones means people are selling. Let's explain the doji candle. This is a doji candle. A doji candle most likely looks like a plus. It usually happens when there is indecision in the market and like market movement is about to change from either high to low or from low to high. For example, now this was an upward movement. As soon as this doji candle appeared, boom, price change direction. So this is a very good sign. For example, now if you see the doji candle and you see a big green candle, you should know that the price momentum has shifted from the buyers to the sellers. Let's explain the hammer candle. Small body with a longer wick. See, it's a small body with a longer wick. Are you seeing that? It pushed the price. Immediately the doji candle appeared, price push upward. Look at it. Immediately this candle appeared, the hammer candle appeared, price move upward. The shooting candle, immediately the shooting candle appeared, price move up. Let's go to the doji candle. I said doji candle. The shooting star, sorry. The shooting star. Let me look for a scenario where I can use the shooting star for you. Okay. This is a shooting star candle with a longer wick and a smaller body. Are you seeing what happened? After this shooting star, price moved down. So all these candles, you can combine them together to be able to tell what direction price is moving towards. Let's explain number 5. Common candlestick pattern. Bullish patterns. Candlestick patterns are combinations of candles that form or suggest possible market direction. Like I explained to you earlier, bullish engulfing, a green candle fully covering the previous red candle, which means that buyers are taking control. Let's show you on the charts. A bullish candle, a bullish, where the green totally covers the red, means that buyers have entered the market and price is likely to move upwards. Let's use a 1 hour price movement for that. Okay. A good scenario where we see this happen is here, right here. This is the bullish engulfing, where the previous candle was totally outshined by the next candle is totally However, where the previous candle is totally outshined by the next candle. For example, you see how this one is small now, but then the green came and it got bigger than it. Now look, if I thought you use this as a sign now to enter the market, see, you see how high the price move. Something that you bought at 185,570, you can be able to sell it at 188,570 due to the use of this bullish engulfing candle. Another example is morning star, a 3 candle pattern signaling a reversal upward. Morning star. Let's look for morning star on the chart. A 3 candle pattern signaling a reversal upward. Let's look for that. Okay, I've seen an example. This is the morning star chart, morning star candle, signaling a reversal upward, whereby there is a red candle at the end, and then you got a doji candle right here signaling indecision, and then you see the green candle take over. What does that mean? The market has moved from the red up to the greens. Now if you buy here now, look at what you would have been able to profit, all the way from here to here. So this is a very good signal that price has shifted from the sellers to the buyers. Evening, okay, bearish patterns. A red candle fully covers the previous green candle, which means sellers are taking control. Let's go. A red candle fully covering the green candle, showing that sellers are taking control. Right here we have a bearish engulfing. Now you see the previous candle, then the next candle that followed right after, very big, bigger than the previous green candle. Now if I thought you use this as a sign to sell, what would have happened? Profits bagged. See, if you sell right here, the difference between the initial selling price and the initial buying back price, that's your profit take. So if you combine these patterns on the charts, you'll be able to spot when it's time for you to either sell or buy. Now the evening star, a 3 candle pattern formation signaling a reversal downward. Let's go towards that. 3 candle pattern formation signaling a reversal downward. Okay, look right here. What do we see? It was previously green, then a doji happened, a doji candle happened, and then we see a big red candle. What does that mean? That the price is now moving from the buyers to the sellers. Do you spot what's happening here? This is the 3 candle formation signaling a sell. Okay, we're done. Summary. Identify candle types: bullish, bearish, dojis. Check patterns. Is it a single candle or is it a 3-in-1 candle? Confirm with support and resistance. That will be our next topic, support and resistance. Now you have to decide your trade plan: buy, sell, or wait for more confirmation. Green candles means buyers are stronger. Red candles means sellers are stronger. Long wick means price rejected that area and is pushing upward. Rejection of a price level. Doji means market indecision, where it's not showing big green and it's not showing down, it's not showing downward either. It's just in the middle. Price is usually in the middle with doji candles. Engulfing, a strong reversal signal, where the one that comes next is usually bigger than the previous one. That is a strong reversal pattern. Now these are the exercise for you. You are going to draw and label the parts of a candlestick. Identify if these candles are bullish or bearish, and you are going to be given 3 candles and decide if they form a bullish or bearish pattern. Now you're going to give me an answer. I'm going to draw some some patterns and let you know. Then you're going to label it for me and explain what those things mean according to what I've explained now in this video. Now, tips for beginners: don't rely only on candlestick patterns. Use trend, news, and volume to determine candlestick patterns and direction of the market. Practice on demo account before trading with real money, and always look at the bigger time frame to confirm real-time direction. And that is it for today's video. I'll send the exercise you're supposed to do to understand better now.